Happy Friday, traders. It is July the 8:01 a.m. 8:01 a.m. Chicago time on July 22nd, 2022. There we go. Now we're cooking. This is episode number 2278. Thanks for joining us today, this Friday, at the end of the week. Beautiful day here in Chicago. Very, very, very hot as it is, I'm sure, where you are. Um, Did I say this? Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. The conversion trading pre-market summary sheet shows that we have a mixed market, which is how we've opened every day this week. We've pretty much opened with a mixed market. This morning, quite a few key releases. We had the biggest one being Verizon. Verizon missed by a penny, came in at $1.31 versus $1.32 expected, and revenue beat by just a little bit, approximately 89, $19 million. The other one we have is American Express this morning. That is key. Amex beat by 6.64%, came in at $2.57 versus 41 cents, $2.41. It handily beat its revenue expectation. Twitter also released. Twitter missed by 157%. Twitter taking a major hit. Was expected to show 14-cent gain, is showing an 8-cent loss on $1.177 billion in revenue. The expected was 1.32. Big miss there on Twitter. And of course, I'm sure you've all heard about the battle that's taking place between Elon Musk and Twitter now over his $44 billion bid on the company and trying to withdraw. So I don't know. Maybe I won't be talking to you on Twitter for long. Anyway, so that's what's on deck for the earnings. We had some key numbers this morning as well. Retail sales out of Great Britain missed pretty badly. Came in at negative 0.5 versus negative 0.2. Wait a minute. Came in actually better. It looks like the page here had the wrong information. So sorry about that. Came in slightly better. Negative 0.1% versus negative 0.2. The manufacturing PMI number out of Germany came in at 49.2, indicating contraction versus 50.8 expected. The prior's 52. The Eurozone flash PMI came in at 49.6. 49.6 versus 51.8, also contracting. Very clear miss there. And then out of Great Britain, the same S&P Global manufacturing PMI flash came in at 52.2 versus 51.9, which slightly beat. The U.S. number is due at 9:45 Eastern. It's the key thing on the calendar. This is not a high impact number usually, but we are expecting it 15 minutes after the open. The market might respond. So that's what's on the calendar. Looking at the S&P, really a dull overnight session across the board. The crude had sold off just a bit. Crude just 60 cents off its settlement from yesterday. Gold holding sideways, silver holding sideways. Copper's been lifting a little bit between yesterday and today. And there's a bid under the treasuries after the ECB move yesterday. The market's basically saying that you are going to cause a recession, both the ECB as well as the Fed. You are going to cause a recession, and you are going to be reducing the interest rates pretty soon. That's basically what they're saying there. If you look at the chart, I mean, yesterday, the 10-year and the 30-year 10-year note, 30-year bond rallied pretty good. Looking at the S&P shows a balanced profile, pretty lackluster auction in the overnight session. The inventory is 100% short, meaning 100% of the volume that is traded is below settlement. Only 19 and a half points of range in a deep summer Friday. 19 and a half points of range. The high is 39, 99.50. Remember, yesterday we went as high up as 4,003, and if you recall, 4,016 is the key. Is the key test area. So here's the S&P. Let's look at the overnight session here. There's the overnight session. Not a single big trade bubble on the screen for the overnight session. Really a balance, but kind of a multi-distribution profile, but really balanced. Pretty weak high, relatively weak low. We've got multiple taps on the low, multiple taps on the high. Pretty ugly action here. There's not much price discovery at all. If we look at the relative delta, we're seeing that the delta is mainly all over the place, really. In the overnight session, the small lots led the move higher. Large lots stayed flat. The very large lots were completely flat. Again, we did not see any big trade dots, and that's evidenced here by the fact that the very large lot indicator is pretty flat. We've had a little bit of movement on some of the numbers earlier, but overall it's been sitting sideways. Now large lots are lifting into the open, and so the delta is moving up. There's not much to glean here. This is just a mess right now. Again, back to the TPO chart. We've been one-time framing up for some time now. We continue to one-time frame up. Yesterday's close is very bullish. I did expect it to slide higher in the overnight session. It has not. It is trading against the high here at 39.99. Man, I am tired this morning. 39.99, and remember, we said that as soon as it beat that 50 level, as soon as it took out that 50 level, we had another at 60, and then from there, there is no structure here. There's no structure into what? What's the price? 40.1625. As I've been repeating in Convergent Trading's chat room, there is just no reason to bail on the longs for those swing traders. Why would you sell at these prices when you can sell up here? And that's what we're seeing. Okay. So overall, really the market operating as expected. The market's responding to, well, the earnings have not been all that great, but the market's responding to early signs of inflation abating. Looking at the order book, really not too much to talk about here. Not seeing large blocks sitting. Of course, we've got some size here at the 4,000 millennial figure, but overall not seeing much in terms of even in the MBO data. We're not really seeing much in terms of posturing or positioning coming into today's open. So I'm going to leave you with that. There's not much more I want to cover here. I did want to talk about this thing that I posted the other day. What motivates you to trade? And I said, I asked you this question earlier this week, and I said I'll talk about it on Friday. It is Friday. I'm going to wrap up with that. A couple things. One, I hope you attended the R Factor webcast I did yesterday with Convergent Trading. If you're someone who sees pretty good returns and then you get whacked, you don't get whacked. You allow yourself to get whacked on one day, like you have a whole week of profitability, and then you give it all back in one day. Or if you're someone who just doesn't seem to get accurate entries and exits, and therefore you blame that for your lack of performance. This webinar talks about the R factor and the fact that your entries and exits aren't as important as you think they are. There are other things that you need to pay attention to, including the fact that you have to identify risk in order to trade with an R factor. I strongly recommend you watch this. This could change your mind about how you're approaching trading and how you're seeing stops. Stops are your friends. Stops are the seatbelt. Yes, it's uncomfortable and it wrinkles your clothes, but you need it, because when some idiot on the roadway cuts you off and you have to slam into a concrete wall, your seatbelt's what keeps you alive, what keeps you coming back. Same with your stop. Stops are just part of the game. The link for this is at the top of chat. It is pinned. It says watch this in blue at the top. You can go find it up there. So it's something we want to talk about. So what motivates you to trade? If your motivation, I'm going to tell you this based on a long time. I know there are a lot of talking heads on Discord and YouTube and stuff about trading, whether it's Forex, equities, or whatever. But my background is in prop trading. I've always traded professionally, and I've traded and back traders and developed traders. I know these things. These are facts to me. Your facts may be different, but to me, what motivates you is really important. So when I'm recruiting a trader and their motivation is to come in and hopefully drive a Lamborghini after a year of trading, this is someone who's going to always be risk-seeking, and is likely to blow up. So tighter risk controls and a lot of mental work to change their mind about why they're trading. You're trading for process. If you want to be successful, you want to trade to be the best at the particular approach that you have. In 2005, I chose market profiling, then volume profiling, and I sought to be the best trader using those tools out there. Before that, I was a high volume scalper in various products, mainly U.S. indices, some energies. Did really well as a scalper, but saw the writing on the wall that it was not sustainable with the advent of co-located computers, kind of playing the order flow book. And the exchange changed the rules to make it harder to read the tape. So moved to market profiling, volume profiling, and the goal for me was just to be good at it. So spent a year not making a lot of money, still made money, but not making a lot of money, but then making a transition from clicking a whole bunch to the tune of somewhere around 400 to 500 trades a day, to picking structure was a very difficult transition. But what motivates me is the process. I need to be here and I need my process and execution to be perfect. That's what needs to motivate you. The returns will show up. As long as your R factor is good, the returns will show up. And this way, if you are thinking from that aspect, you are not bound and are imprisoned and are emotionally hijacked by every single trade. If it's about process, your goal is to constantly go on to the next trade. I don't have time to lament and think about and get angry and whatnot about the last trade, because the next trade is setting up. The market, the narrative continues. So my motivation is to continuously align myself with the wave, with the next wave, so that I can surf it as best as I can, versus looking for how I got paid, how much I got paid, and so on. So anything we do, in my experience, having been an entrepreneur, serial entrepreneur for a long time, every time the motivation is money. If I'm coming into a business to make money, I'm almost guaranteed to lose money, because my motivation is wrong, and the decisions I make and what I focus on and what impacts me and gives me confidence and my measurement of success is completely wrong. Take away the P&L from your screen. If you're trading micros and you're inconsistent, take the P&L off for a week. Set a loss limit with your broker. I can recommend a broker, of course, if you look at the bottom right corner of the screen. I should disclose that I'm the owner of EdgeClear. have your broker put a daily loss limit, and don't look at your P&L every day. Don't trade your P&L. Just focus on your process. As long as you have tested out, checked in sim that you have an edge and have a process that you follow, and you only need one setup. You only need one setup that you focus on. It shows up, you take it. It doesn't show up, you just sit. So your motivation has to be perfect execution and a perfect process. That's it. Cannot be money. So if you find yourself checking your P&L with every trade, if you find yourself taking trades because you need to make money, the long-term game or the odds are against you in that game. So recheck your motivation. Your motivation is the seed or the source from which you make decisions, and it's likely to impact your trading in the long term. With every trade, that motivation is the inception of the action. And then your reaction to what happened, if it doesn't align with your motivation, is going to create an emotional response, and then tilt, and you have these problems where you do well for a few days and then you blow up and lose more than you made in a few days in just a couple hours. Okay? I'm giving you the best advice that I know of. I know it doesn't resonate with everybody. I know it has to be repeated, but if I can save a few of you from going through that pain, that's what I'm here for. I'll leave you with that. I don't have, the trend is up. I don't have anything to say about the ES. It's likely to be a pretty boring day. We're likely to continue to float towards 40.16 today or next week unless news comes out that changes that. Overall, not expecting anything different. Good luck, and I'll catch you on Monday morning. Take care.